Well, good morning, everyone. Thomas Montgomery. It's a beautiful Wednesday morning, October 20th, 2021. We get together with our distribution partners most weekday mornings at this time via Zoom, usually a minute or so before 8 o'clock Central is our starting time. Our goal is to spend the next 30 or so minutes together with practical, valuable, useful information. Our conversation today is certainly oriented towards our white label partners. And we have hundreds of white label partners, and we're excited and humbled to work with each and every one of you. If you are not a white label partner, in other words, you're most likely an affiliate, you're more than welcome to listen in on today's conversation. But the truth is, most of it is not relevant to you. Our white label partners are really the market leaders. They're involved with the clients, setting the client pricing and terms. And of course, we do a 50-50 revenue split with our white label partners. So we're going to talk about today white label partner best practices. And so this is meant to be very interactive. We've got a number of points to go through, but at any point or throughout the conversation, if you have a question, a concern, you need clarification, just go ahead and put it into the Q&A, the question and answer box of Zoom, and we will address it promptly. Okay, so if you're not a white label partner, I guess here's the plug to do so. It's super easy to do so on iimfl.org/white label. Maybe most importantly, what I want to bring on this bullet is this is the resource site that we've created, and we've parked, I believe, just about everything that you would need to access as a white label partner on that one page. So unfortunately, every once in a while, I'll be talking to a white label partner, maybe new or not so new, and I'll ask, well, do you know where to go find information about training and processes? No. Well, this is it. It's iimfl.org/white label. All right, so digging more into the meat of the matter, getting trained is important, and I could spin this a few different ways, but I'll just kind of hit the nail on the head. Anytime that any of us decide to pursue a new career or a new revenue stream, if there's going to be a material amount of income generated or could be generated, we probably need to spend a material amount of time to hone our craft, to learn the information. I think we live in a society now that's very much a skim society. Well, I'll just skim everything and it'll be just fine. Well, as a white label partner, you're contracted with us. We've got promises to you. You've got promises to us. If you want to skim, you can, but I think you're shortchanging yourself and probably shortchanging your clients if you're not diligently going through the training that's available. There's no passwords. There's no hoops to jump through. There's no scheduling that you need to do. It's on demand. Where is it? Same page, right? Some people will argue or be a bit combative and say, well, you know, there's quite a few training videos there. Do I really need to go through that? Well, I guess it's up to you. But if you were going to decide to become a plumber or an electrician or an accountant or an attorney, is there a fair amount of prep work you would need to do to be competent and confident in those trades? Yeah. Do you have the opportunity as a white label partner to make more than any of those? Absolutely. So again, I don't know how to convince you to do it, but we do recommend a diligent review of the information on the resource page. I was talking to a white label partner yesterday, not nice guy, and he's been with us, I don't know, probably 30 days or so, have submitted in a few clients, nothing spectacular. I was just touching base with him yesterday, and he's doing a lot of things wrong, and he just hasn't taken the time to review the information, to know how to do it right, and it's probably going to cost him, I don't know, $10,000 or more by doing it wrongly. So there's no secrets, there's no hacks to this, but I just don't know how to convince you or convey, more importantly, if you're going to be a white label partner, you need to spend some time to go through the training material. Okay, any questions so far, or are we going to keep rolling? And I know that's a bit redundant. And those of you that are diligent and you've gone through the training, you're like, why are we still talking about this? Of course you should get trained. Of course you should go through the material on the white label page. But I apologize, just some people haven't. And if you're one of those, it's okay. But I would set aside the time to do so. Okay, so moving on a more positive note then. Bullet number 3. Setting goals is relevant. You know, we just started the NBA season yesterday. There were only 2 games, and what the Milwaukee Bucks played the Nets, and the Lakers played Golden State Warriors. And so whether you're a professional athlete or a professional in the space that you and I are in, it just makes sense to set out goals. Now, NBA players, they probably have their goals for the year. You and I just need to frankly set monthly goals. As a white label partner, I sure hope, I pray that your goal is at least 8 conversions per month, because that's the deal. That's what we promised to do. When you enrolled, we said, okay, we'll give you 1 month grace period to pick up speed, and we're here to support you. But you need to have at least 8 white label client enrollments per month to remain compliant. Now, the good news, if you do that, you translate that out to income, and you're on track for a really good month. And we'll talk more about dollars and cents here in a minute and where that comes from. But if you're not doing that, you're not compliant, and you may even get an invoice from our billing department for not being compliant. So please, please, please set monthly goals. We'll work with you to accomplish those goals. And 2 a week, 8 a month is not hardly fogging the mirror. It's a very small goal, but it can generate some material results. So if any of you haven't read the white label agreement that you signed, the terms and conditions when you enrolled, make sure that you're familiar with what we promised to do for you and what you promised to do for the relationship. And it includes those 8 per month. If anyone has questions on that, let me know. Now, with that being said, I think the opportunity is too big to shoot small. And so what I'd recommend is let's set monthly goals of helping at least 30 a month. Now, that sounds maybe like a big number, but that's 1 a day on average. Take Mr. Twine, who's on the training today. Mr. Twine enrolled 2 clients yesterday. Well, he's 25% of his way through the minimum goal for the month. And he's ahead of himself for this week even. So it's up to you how many people you want to help. And I realize there's not exactly a crystal ball to say, okay, I'll help 100 people this month. That's really the outcome. The effort of prospecting and feeding people in is what's going to generate the outcome of enrollments and thus into income. But the point here is we recommend setting a monthly goal, and we'll work with you to do everything that we can to help you meet or exceed those monthly goals. So, I mean, October is not over yet. I realize we're about 2/3 of the way through October, but you could at least set a goal for between now and the end of the month. There's 11 days left, and that's more than enough time to hit our monthly minimum if we're not on track, at least for that. And then we also want to be thinking forward to November. What is our monthly goal for November? If anyone has questions on monthly goals, just let me know. You can put it in the Q&A, the question and answer of Zoom, and we'll address it. Okay, so now we're going to dig into some more details. So let's scroll down to talking about getting yourself. And when I say that, I mean your white label partnership. When you contracted with us to be a white label partner, you are an entrepreneur. You are running your own shop. You have this white label partnership that you're able to run through whatever umbrella that you want, taking it to the market with your branding, your reputation, and we're able to go execute. So let's talk about a few of the things that need to be done to be prepared to start handling clients. Some of this may be obvious, some of this may not be. So let's get started. As a white label partner, And again, I know this may be obvious to some of you, but I'm horrified sometimes when I talk to white label clients and they don't realize that, I'm sorry, white label partners, and they don't realize this, is you are contracting with the clients. If you are a white label partner, then you generate white label clients and you contract with them. We've had different discussions on this. Do you have to have a written contract with your client? Technically, no, but I certainly would recommend it because it will help alleviate discrepancies in what they think is supposed to happen and what you actually do. So having written agreements is solid, and especially to make sure that we don't get caught in money disputes later. We've provided you technically 2 templates. I know this is singular here, but on, again, the same page, right? You notice the same link keeps occurring over and over because that's the go-to place for white label partners. But technically there's 2 templates. One is the access to capital. The access to capital is when you're enrolling a client as a white label client, they're contracting with you, not with us, with you, and you're not charging them the refundable deposit up front. Instead, you're saying we'll defer it until after your first capital raise. That's the majority of what we do. The variance of that, which is the second template, also located on the white label page, is when you're charging them the $2,500 up front. So we don't need to go get the first tranche financing. They've already paid you in advance. The crux of the agreements are the same. It's just the timing of when that deposit is collected. So with that template, they're posted there as Word documents. So what do you need to do with that? Well, first you need to add your entity or your individual name, however you're going to contract with the clients. You need to make sure that all the addresses match with yours. We had one white label partner, and she's a smart woman, but she sent out that damn template using our company name. Well, that's craziness, right? That's not what a white label partner does. She doesn't have contracting authority for us. She can't sign on behalf of us. And so she sent out a bunch of agreements that are unenforceable. Obviously, we're all smarter than that. There needs to be 2 parties of an agreement. You or your entity is one, and then the white label client is the other. We're not either of those. We have an agreement with you between the white label partner, and us, but the contracts with the clients are between you and the client. Also, within those templates, you can go in and make changes in terms of the rates. You can change the refundable deposit. Frankly, you can make the deposit not refundable or refundable. You set what the performance fee is. It's up to you. It's your agreement. Now, most of you will use the standard template, just customize it to your branding and then roll with it, which is fine. It's up to you. But we need to start, after the training. I think doing the training first makes sense, and then getting the goals out of the way is a quick one to decide. But you do need to have your client agreement up and going. We've had, these agreements were developed by an attorney. Her name's Karen, but you can have your own attorney review it. If you want to make changes, it's okay. You're not going to hurt our feelings. It's really, we're indifferent. It's between you and them, you and your client. But you need to have those agreements ready to go. Now, how do you contract with a client? You could set that agreement up in Adobe or in DocuSign. You could set it up as online terms and conditions. That's really up to you how you want to go about executing that agreement with your client. That's just rather mechanical, but you need to have a client agreement that you sign with the client before you submit them. We have a couple white label partners, and a couple of you are online now. You didn't bother to get clients contracted. You just submitted them in on the submission form. So you're placing orders with us. You're promising to pay us for what we do for each of those clients. But in that case, you don't have a promise from the client to pay you. That's craziness. I was working with that same white label partner I was mentioning earlier yesterday, and I said, you need to go back and get these people under contract. I think he had submitted 8 people, so it wasn't an outlandish amount, 6 or 8, I don't remember exactly, but now he's backtracking because these people are already in process. And if they get funded, they've not promised to pay him anything because he doesn't have an agreement. Or if they just quit, how's he going to hold them accountable? They've not signed an agreement. So obviously having an agreement is important. Some people make agreements sound like they're somehow, taking advantage of people. No, the agreement is the opposite of that. It states exactly what you promised to do, and it states what the client promises to do. And as long as both parties are doing that, then everything's kosher. If there's a disconnect between what one of the two parties is doing, then of course you want to be able to resolve that, but be able to professionally and friendly say, hey, that's not what we agreed to do, and let's get back on track. Any questions on the client agreements that are available on the white label page? Any questions? Okay. And we've talked about that before, but we continue to see it as an issue. It's probably the people that aren't listening to these trainings that aren't complying. So I guess we're caught in a little bit of a problem there. But anyway, now this next one is not a topic that we've really dug enough into. So this alone could have been our topic of the day. If you are a white label partner, you need to have a client billing system. And that's true any business. If you went to medical school and opened a medical practice, you need a medical billing system. You need some way to charge, in that case, the insurance companies or the clients for the money they owe you. If you opened a muffler shop, you would need a client billing system, some way to collect money from clients. That's what businesses do. You could open a bakery. You need some way to collect money from people that are buying your baked goods. You can't run a business in general without a billing system. Now, the nature of the billing system will vary by the industry and your type of clients, but let's just go through kind of a quick checklist. And if you're not asking questions on this one, I'm concerned you're not engaged, because I do believe that some of you don't yet have a true client billing system set up, and that's going to be at a disadvantage, put you at a disadvantage. Okay, so first of all, like most things in life, you can either do your own billing or outsource it. You might say, I don't have time or interest or the acumen to do the client billing. Well, great, outsource it. You can hire a bookkeeper, an accountant, whomever you want to do it. I guess we could even do it for you, but regardless, it needs to be done. And if you don't want to do it, you can outsource it. We talk about QuickBooks. And again, I used to teach QuickBooks, so I'm familiar with it, but we don't have any financial interest. We're not going to give you some code to sign up for QuickBooks so we get some kickback. It's nothing like that. So we'll commonly talk about QuickBooks just because it's the most widely used small business accounting software that helps you stay organized, stay compliant in tracking revenues and expenses, assets and liabilities, and to be able to produce financial statements as well for funding purposes. So you don't have to use QuickBooks. I don't care really if you use QuickBooks. If you use QuickBooks, then when we're talking about it, I can be more of a resource to you. But if you want to use something else, or you can outsource it. But you do need to have the ability to collect payments from clients, because when we talk about, we want each of you to generate $100,000 a month. That's our goal. That's our goal. We want you to be able to generate at least $100,000 a month. With that being said, you will collect $0 if you don't have a billing system in place, right? And it could be more formal or informal. QuickBooks, I like, and Jeremy mentions PayPal has invoicing and reporting, and that's fine. So Jeremy, does PayPal allow for ACH transactions? I don't know. I've heard horror stories about PayPal, how they sometimes can lock down your money and not free it up. Again, I don't care. But Jeremy, do you know if PayPal allows ACH? Because that's the next sub bullet here. What I would recommend that you set up is the ability to accept funds from clients multiple different ways. And accepting credit debit cards is common. You may or may not want to do that. ACH, which is bank to bank. So QuickBooks, you can generate a professional looking invoice. You can set up late fees, which is what the agreement template normally has. If they don't pay you within 2 days, they start getting the $50 a day late fee, which can be motivating to them. And of course, you can write that off if you want. But having the ability to invoice clients and the ability to accept payment multiple ways is advisable. So again, if you just ask me my advice without me having any financial interest in it, I would say I would use QuickBooks. It's a great way to go. If you don't want to use QuickBooks, you're not really well versed in all of this, then just outsource it. Hire a bookkeeper to do it for you. Any questions on this bullet? QuickBooks. Okay, moving on. So again, as questions come up, let me know. We encourage you to run your white label partnership like a legitimate business. And so let's talk about what that means a bit. So let's take Mr. Twine again, who's online. He enrolled or he submitted, I don't know when he enrolled them, but he submitted 2 clients late yesterday as white label clients. So what should Mr. Twine do? He should go to his QuickBooks, assuming he's doing it himself, not outsourcing it. If he's outsourcing it, needs to instruct them to do it. And so for those 2 people that he enrolled last night, he would go book an accounts receivable amount of $2,500 for each, because he knows, because they've signed a contract with him, that they're going to pay him $2,500. Now, he's not invoicing them yet, because the deal with Access to Capital is we wait until their first tranche of financing before he invoices them. But with that being said, he knows that that is owed to him, so he should post that in his QuickBooks to reflect a sale and an asset. Secondly, if he's using the normal 10% performance fee off of a guaranteed $100,000 capital raise, he should go ahead and book in QuickBooks $10,000 for each of those clients, $20,000 total of AR for upcoming performance fees. Is he invoicing them for those performance fees? Of course not yet. No, they just enrolled yesterday. They've not received any funding yet. But is he owed that? Yes, he is owed that, but he's just not owed that yet. It's called accounts receivable. And then also, depending upon how Mr. Twine or how each of you write the key person policy, normally it's about $1,000. So each time you enroll a client, like Mr. Twine enrolled 2 or submitted 2 late yesterday, he's putting in $13,500 of accounts receivable in his QuickBooks. Well, why would he want to do that? Why bother doing that? Well, number one, it's real. He has a contract with the client. I hope, I pray. Mr. Twine, do you have written contracts with both of those clients? Can you respond in the chat? I trust that you do. You know what you're doing. And so it is money that's owed to him in the future. And this is a correct amount. So he would want to but set up in QuickBooks 3 different receivables, because they're off of different triggers. Now I realize that the client may not get their $100,000 all in one tranche, so he would then post to cash once he receives the portion of the performance fee, and the remaining is still accounts receivable. I'm not here to teach you to be accountants. I taught accounting, but you can either do this, outsource it. QuickBooks has great support, but the point is, you should really book $13,500 each time you enroll a client. And then, of course, the goal is to collect that cash as quickly as possible through the performance of the program. Timothy's got a question. It's a good one. And so clients sometimes want a bigger capital raise than $100,000. So that would vary this. You as a white label partner could just have a standard agreement for all clients, which is what we normally do. Or like I was talking to a client yesterday afternoon, and actually at the beginning of the call, he wanted to quit. He didn't want to continue. And so we talked about it a little bit. He became more comfortable. He enrolled a second company that he's going to do a capital raise on. He enrolled as a white label partner during that call. And then also he said, I really don't want $100,000 for this first company. I said, okay, what do you want? He thought a minute. He said 1.25 million. I said, great. I said, I'm like a realtor, right? The bigger the house you want to buy, the more I make, we can go after whatever you want. So he's not going after 100,000. He's going after 1.25 million. Awesome. Now, frankly, I didn't go in and change the agreement and send him a different agreement. The point is, you could do that. If someone says they want 1.25 million, you could change the agreement to that. And so then all of a sudden your guaranteed performance fee goes up tremendously, right? It'd be over $100,000. But normally we just use a standard agreement. Normally we're just guaranteeing the 100,000. So the 10,000 performance fee that you book as accounts receivable would be accurate. Does anyone have any questions on this bullet? Are you all doing this? Maybe I'm wasting your time. So John and Beatrice and Ben and Bernard and Bruce and Charles and Christopher and Damon and Jeremy, Joseph, other Joseph, Larry, Mark, other Mark, Pauline, Pete, Samuel, Spencer, Tawana, Zon, and others. Are you all doing this? If you are, kudos. But my concern is many of you aren't. So that's why we're talking about it. Okay, so then you're going to be prepared to invoice clients at key milestones because you have an agreement with them and you're using either QuickBooks or something like QuickBooks, or you're having a bookkeeper do it for you. So what are some key milestones? Well, after they receive their first tranche of financing, you're going to invoice them for the deposit. Many of us make that a refundable deposit. That's your choice. And most of us do 2,500. I know some of you do more or less. That is your choice. But the point specifically, that would be a time that you invoice them. After they receive each tranche, then you're going to invoice them for the performance fees. And so within QuickBooks, you can go in and set up items, products, or services. So you kind of set it up in advance. You've got the description, you got the normal rates. You can always edit it on the fly. But the bottom line is it makes it pretty simple. It's just a matter of a couple minutes to invoice the client because you don't have to recreate the wheel. If you're doing an old school, like where you're just creating, via Excel or whatever else, that's probably not populating into a database where you can do reporting. You're going to end up working with an accountant. With QuickBooks, and I sound like a QuickBooks salesperson, I don't mean to, but with QuickBooks, you can share access to your file with your accountant. So just yesterday, I was on the phone with my accountant. So my accountant can go into my QuickBooks and help make corrections as necessary, prepare for tax returns, and all of that. The third, I digressed a bit. So the third milestone, and this is a really important one, we'll spend a little more time, of when you would invoice a client is if they breach. When could they breach? They could breach because they never fill out the funding proposal app. Well, if they don't fill out the funding proposal app, what do? You're going to invoice them for $2,500 because the deal is, hey, we'll defer your refundable deposit and access to capital until after your first capital raise, but you have to participate. Okay, Larry is asking about contracts. So Larry, yes, sir. The client agreements, the templates are, oops, didn't mean to cross through that. Still don't know I'm crossing through it, are here. So yes, sir. Okay, so the first reason for breach is if they don't fill out their funding proposal, because then there's no way for us to get them first tranche financing. So then you just go ahead and invoice them for the $2,500. Maybe we've gotten them offers for their first tranche financing. They didn't like them. Great, you don't have to accept it. I'll just invoice you, can just pay me directly. And me meaning you. You're invoicing the client. You're receiving 100% of the funding. Maybe they have received a capital raise and they don't pay you on time. Well, forget that. Maybe they have received a capital raise. Each time they receive a capital raise, you're going to invoice them. And then if they don't pay that, of course, that would be a breach. So the point is, if you're using something like QuickBooks, it's really easy to track money that's owed to you and invoice clients at key milestones. I stumbled through that a little bit. Sorry. If there's any questions, let me know. Now, all of us, and I'm sorry to say this, but it's true. I think all of us will eventually face what we call non-performing debt. For whatever reason, not everyone will do what they promise to do. We have some white label partners that sign up and they do nothing. So what happens? We invoice them. You're going to have some clients that sign up and they don't fill out the deposit. I'm sorry, the funding proposal app, which we talked about, to be able to receive the deposit. Some people will receive funding and they don't pay you. It just will happen. It's how people are. I don't know why people don't do what they promised to do. So when you have people that don't pay you as promised, we call that non-performing debt. And so we actually have a couple white label partners on the training today that fall in this category. They signed up as white label partners. They promised to get active. And we've got a couple that have not even referred in one client as a white label partner. Well, what do you do with non-performing debt from your perspective? There are really four categories of response. You could sell that non-performing debt. However, you're normally not going to get dollar for dollar because it's non-performing debt, right? Because how much do they owe you? Well, you booked $13,500. So if someone just signs up and then they quit, do you think that you can reasonably sell that for $13,500? No. But normally you can sell it for $1,250. That's the norm. So one option is to sell your non-performing debt. So you sell the contract, you no longer owe it, you're not involved with it anymore, someone else takes it on. And we see that there are law firms that'll buy it, and then there's just debt buyers that'll buy it, and we can help you facilitate that. So that's one option. I'm not saying it's the best option. I didn't list it as the first bullet because it's the best option. It's an option. Okay, and then the next is you could send it to a collection agency. Collection agencies often will work on a contingency basis. And so what they'll do is they'll send out a bill, they'll report the people to the bureaus. We have a bunch of clients that are going to a collection agency this week that haven't paid. But regardless, collection agencies then collect. They have fees, but usually, well, the way our agreements are written, the client pays the collection agency fees on top of the principal. So in this case, if you're using our standard agreement template, it wouldn't reduce the amount of money that you're making. You would get your normal amount, and the collection agency would collect fees on top of that. So unfortunately, it becomes more expensive for the client if they don't perform, but they know that. That's what they agreed to when they enrolled. So that's the second way that you could manage non-performing debt. The first is to sell it to a debt buyer. The second is to send it to a collection agency. A variance of that is there are attorneys that will work non-performing debt. They're not acquiring the debt because that would be a sale, but instead they're working to collect that money. Usually they don't charge you. They work on a contingency basis, kind of like a collection agency, but they go to litigation. So these two can be kind of combined. Collection agencies will usually try to collect and report to the bureaus. Contingency attorneys often won't report to the credit bureaus that the person is not paying as agreed, but instead will just litigate. And again, contingency basis is usually the same on both. So you're not paying up front for the collection agency or for the attorney. They get their money on the back end. It's extra fees that the client pays if they have defaulted. Sometimes you'll have collection agencies that will start with their normal protocol, and then they'll have their own contingency attorneys that they hand it off to. So these two could be linked together. And I guess you could just write it off. You could say, oh, it's not worth it. Just write off the debt. Again, you have agreements with your clients and we have agreements with you. And so what you want to do with your client is up to you. Just keep us up to speed of what you're doing with your non-performing debt, your non-performing clients, so we understand what's happening. Are there any questions that any of you have on the non-performing debt and the 4 different ways that it can be addressed? Pauline asked, how do you know when a client accepts the first tranche? Well, we're notified, and then we notify you almost always within 24 hours. It's a big deal, right? It's a big milestone because it's going to trigger you invoicing the client for payment. And so we will know from the lenders. You may know before we know. The clients, if you've got a good relationship with the client, they'll probably tell you. But the bottom line is once they've received that first tranche of financing, then you want to invoice them. Okay, so again, on managing non-performing debt, are we good there? Anything else? All right, so we're kind of wrapping up. What we're talking about are white label best practices. We talked about a number of items. We're almost done here. Obviously, if your goal is to make money, then you need to have conversions, and to have conversions, you need to have leads. And there's multiple trainings that we've had on that that's parked on the white label page. But it really falls into 4 categories, just to summarize. You can become a financial literacy educator. You teach in person or online, and that can create a great sales funnel. And we've talked about that. There's recent trainings on that, and you can learn more about on the financial literacy page. You can buy leads, and you can buy leads from lots of different places. A number of you have had really nice success with Real X Traffic. Our top guy in August that had over 400 conversions, not leads, not prospects, but over 400 conversions. Real X Traffic was a big part of his success. You need to have a landing page, of course, if you're going to be doing this type of marketing, and Scott Stroud, our Chief Marketing Officer, can help you with that if you need help with a landing page or create your own. Third option would be to go generate your own leads, and that could be done a number of different ways. There's listings of businesses, new start, existing. You can sort it by state, county, zip, by industry, home-based, non-home-based, good credit, bad credit on Data Axle. So there's other places, but that's just a good resource if you're not aware of it. Used to be called Sales Genie and Reference USA, but I guess they rebranded Data Axle with a hyphen in it there. And then we strongly encourage you, regardless of what you're doing with the other 3, develop a referral program. Now, it's not a capital R and a capital P, so it's kind of a general term, but you should definitely, we believe, create some sort of referral program. And I'll skip ahead. You can do this formally or informally, but the bottom line is there's lots of people that will refer clients to you if you give them an economic reason to do so. So as a white label partner, you could decide how much you want to pay them, what the triggers are. It could be nothing up front. It could be just after the client's funded. It could be just per lead. It's up to you. But if you're not building some sort of referral program, whether it be informally developed or formally, I think you're missing out, because there's so many people that want and need capital. There are a lot of people that know those prospects. And if you had a relationship where they were paid to refer to you, that could create an outstanding lead flow. So we strongly recommend building a referral program. And we've had some trainings on that. And those trainings are all posted where? On the white label page. All right, so let's wrap it up because we ran a bit long. So today, October 20th, we went through some white label best practices. If you're not a white label partner, let's do that. Easy to do right there on the white label page. Once you are a white label partner, you really need to pay attention to the training that's available, also on the same page. We recommend going diligently through it. We recommend that any business owner, whether you're a plumber or an accountant or a white label partner, have monthly goals. Obviously, you need to have a monthly goal of at least 8 a month after your first month grace period. That's going to put you in line for good income, but it's also going to keep you compliant, because again, when you enrolled as a white label partner, We each made promises. You made promises. You promised to generate at least 8 per month to avoid the deposit. If you don't hit that, then our billing department is going to invoice you for that deposit because that's what you agreed to do. Regardless of shooting small, we recommend shooting large, and if that's a good phrase, and we should really have a focus on helping at least one client per day on average, 30 a month. That's going to generate adult income and create much more impact. You need to make sure that you're prepared to handle clients. You need to have a client agreement, and we have a template. We have templates available for you on that same page. You're going to need some way to bill clients. You can do it yourself or you can outsource it. We recommend QuickBooks, but I don't care. We don't get paid off if you're using QuickBooks. It's just what we use, so we can speak more intelligently to that than any of the other options. You're going to have some clients that don't pay you, unfortunately, or don't participate. You need to have a plan of what to do, and your plan could vary by client. You could sell their debt. You could use a collection agency. You could use an attorney to sue them, or I guess you could just write it off. You need to have a good lead generation strategy, or strategies, could be more than one. We've talked about those. And we really, really, really recommend having some sort of referral program, no matter how informal it may be. Okay, are there any questions, comments, or concerns that anyone has before we wrap up today's training? Any questions, comments, or concerns? All right, well, thanks everyone. We'll see you back tomorrow morning. Have a good day. Make it count. Bye-bye.